Did you know a simple paperwork error can cost your business hundreds of thousands of dollars, potentially? I just reviewed a Texas case. It was a lawsuit brought against the business, and the owner of the business is facing massive penalties for misclassifying employees as independent contractors. Huge area of law here, a lot of scrutiny. A lot of this comes out of the gig economy type stuff with Uber drivers and with Lyft drivers and Uber Eats and those kinds of things. Lots of abuses of people potentially classifying them incorrectly. As an attorney who reviews hundreds of cases brought against small businesses, I can tell you this is one of the top ways that a business gets sued by both its workers and by state or government agencies. Hi, I'm Jonathan Feniak. I am the lead attorney for LLCattorney.com, and I've helped thousands of entrepreneurs start their businesses and protect their businesses from costly lawsuits and government fines. Today, I'm going to share exactly how to avoid the employee misclassification trap that bankrupts companies all across America. In the next 10 minutes, you're going to learn three critical things. First, I'm going to explain why this simple classification error is so dangerous and potentially expensive. Second, I'm going to show you the exact mistakes business owners make. And then finally, I'll reveal the specific legal structure my clients use to protect themselves. And it's a solution most attorneys won't tell you about because it's actually quite simple when it's done properly. Let's get started. Let's start with understanding the problem. Employee misclassification happens when a business treats someone who should legally be classified as an employee as an independent contractor. When you classify someone as an independent contractor, and I completely understand why you would want to do this, because it simplifies your life, it simplifies your record keeping. What you avoid by classifying someone as an independent contractor is paying the payroll taxes, obtaining workers' compensation insurance, getting unemployment insurance, even setting up payroll, overtime pay, minimum wage requirements, benefits, all of these sorts of things that you have to, in most cases, at least most of those things, when it comes to someone being an employee, you have to do those things. But by classifying them as an independent contractor, you can avoid all of that administrative burden and additional expense. From a business perspective, you can save potentially 20 to 30% on labor and overhead costs. So just last month, I reviewed a case in Texas, and these are not cases. The cases I review are not ones where they've gone and there was some difficult matter of law, and they were appealed and they went to the Supreme Court. These are low-level cases where it's really clear that the company misclassified their employee, and the penalties are really easy for that employee to enforce. So this is a Texas case where a business owner is facing claims under the Federal Fair Labor Standards Act for unpaid minimum wages and overtime plus unlawful retaliation. So this suit is seeking really significant compensation, potentially hundreds of thousands of dollars in compensation that they were denied, lost wages, damages, and legal fees. So those things really can pile up, and we compare that to the 20% or 30% extra it would have cost to properly classify that employee as such. It's not a hard math problem to figure out. In this case, I really think the math is mathing, and don't misclassify. We're not here to only talk about the problem. We're here to talk about solutions. There's a lot of confusing rules about whether someone should be classified as an employee or as an independent contractor. The IRS uses a 20-factor test. Department of Labor uses a 6-factor economic reality test. The state of California uses a very strict, what they call the ABC test. And, if there's any doubt, probably classify that person as an employee, but you can structure the relationships. You're in charge here. And so there's things that you can do to protect yourself. There are some misconceptions people have that they think that sort of with a wave of the wand, or if they do certain things, they can turn what would be an employee into an independent contractor. And so one of the things is they say, well, I got a contract with this individual that says they're an independent contractor. They signed off on it, therefore they are an independent contractor. Unfortunately, that's not enough, right? Having someone sign the agreement really doesn't matter if the reality of the relationship is one of an employer and employee. The government looks at the reality of the relationship, not just the paperwork. Part of this is because they probably didn't hire an attorney. They don't know the rules, and it's sort of there's an idea that certain things are going to be held against the drafter of the contract. You were the drafter. You're the one who hired that person as an independent contractor. They didn't hire a lawyer, and they wanted to get the money, right? They wanted to get the job, so they're willing to sort of not even potentially even read the contract, just sign off on it. The second misconception is that a independent contractor only works part-time, and therefore they're not an employee. But the hours worked has nothing to do with the classification, whether they're 40 hours a week, 60 hours a week, or 10 hours a week. There's different tests that will apply if they're an employee versus an independent contractor. So you can have a part-time employee, you can have a full-time employee, and you can really have someone that you're paying on an hourly rate, or you just give them a flat fee. It really depends, again, on the nature of that work relationship, not their schedule. The third misconception, and this is one where I think when someone has been terminated for a failure to perform the job, comes into play, and that's the person wanted to be classified as an independent contractor. The laws are set up here to protect workers, right? Protect workers sometimes from themselves, and worker preference is going to be irrelevant in a legal determination. Now, if there isn't a problem, right, down the road, and they don't go and apply for unemployment insurance and they don't bring a claim, then no one's going to know, right? You misclassified them, but it's not going to be known. There's going to be no damages, but that's a really risky game to play and potentially play. If someone begs to be treated as an independent contractor for their own tax benefits, you can still be held liable if the relationship legally qualifies as employment. Now, again, the government is not coming in and just looking at all of your contracts and these sorts of things. So there would need to be some impetus, somehow that would need to come to the attention of the courts or the government. But in a bad situation, a bad ending, a bad breakup, that definitely can happen. So some industries you really need to think about whether you're going to be more at risk and there's going to be more scrutiny. Construction is one. Things having to do with real estate is another. Delivery services, we talked about Uber Eats and things like that, and then transportation, Uber and Lyft, or truck drivers. Professional services of one sort or another can also, you got a lot of contractors doing a lot of different things in a lot of different places. That can be a problem. And then technology and gig economy companies, where you tend to be on a tight budget, you're looking for that simplicity. Those industries are known to have a higher incidence of misclassification issues. We're here for solutions, though. These are the problems. There's some misconceptions. But one of the most effective ways to avoid misclassification claims is to require your independent contractors to have a business entity. Okay? Then it's a business-to-business transaction. There's no doubt when they have a business entity rather than an individual, you're creating this clear relationship between the parties, and it's going to be much harder to reclassify that relationship as employment. You have your business entity. You're operating through your business entity. And what I recommend is step one, you require your independent contractors to form a proper business entity like an LLC, perhaps a corporation, in their state of residence. At LLC Attorney, we can help your contractors get started really quickly. So you can impose this on them. You can even give them a say, hey, I only want to work with a business, so I'm going to give you, once you form your business entity, I'll give you a sign-on bonus of a couple of $100 to cover your costs there. You want to create, number two, you want to create a business-to-business contract. It should be between your company and their company, not them personally. And the contract should specifically define the business relationship. We're in need of someone who has expertise in online marketing, and company X has expertise in online marketing, and we believe that their business is one that can fulfill our needs and goals. And it clearly establishes and states that they're responsible for their own taxes, insurance, and compliance, right? That contract, getting a great template or form document for that is critical. And in the LLCattorney.com portal, you're able to purchase great independent contractor agreements that you can use in all 50 states. Step 3. You want to maintain proper documentation and practices. So you're going to pay them through their business. You're not going to send the payment to their Venmo. You're going to require an invoice from their business outlining what they did, how they hit the metrics you wanted them to hit, what work they performed, and you're going to issue that payment to them. To their business, not to them personally. I almost said it wrong. You're going to get the W-9 form from the business that has their business EIN, not their social security number. And then you're going to issue a 1099 to their business so you get that business deduction and so that they report that income on their personal taxes or business taxes. Finally, the practices are you can help them along, right? You can provide them with some tools or equipment that are proprietary or access to technology to use to fulfill the job, but it should be clear that you're lending it to them, right? It's not theirs. It's better if they come with their own equipment. You should not be dictating their specific work hours, when they need to show up, or where they need to work, where they need to show up at work, and when they need to do it. You want to make sure that you're focused on outcomes, right? It's outcomes that you're interested in when it comes to independent contractors. If you want someone to stand at the counter of your store or your taco truck, I love tacos, stand at the counter of your taco truck, there's really no way you can classify them as an independent contractor if you're giving them all the tools, you're telling them when to show up, you're telling them what to say, you're telling them. That clearly is going to be an employer-employee relationship, not independent contractor or a business-to-business relationship. Another final, we call this the bonus tip. Another bonus tip here is that in sort of higher risk relationships with contractors who perform sort of core business functions for you, you may want to consider adding additional provisions to your agreement that have compliance for their business entity. They need to comply, they need to pay their taxes, and they need to provide some documentation back to you showing that they've done those things. One of them including, having insurance in the event that they mess something up within your business. One of the things I hear, it's going to be too expensive and complicated to have my contractor, every contractor I work with, open up their own LLC. I have to say it's not, right? We've made LLCattorney.com super easy for anyone to open up an LLC, get the bank account, get the EIN, and be compliant from day one. We've put in the description below the 20 IRS tests, the 6 Department of Labor tests, and then information about the ABC test from California. I want you to have a sort of a look in the mirror and say, have I potentially been misclassifying people? And then if you're not sure, in my experience, you're misclassifying, right? It's usually pretty bright line when you're looking at these things. If you really want them to be independent contractors, then you may have to change what you're doing. Again, their tools, when they show up, when they work, how you're paying them, so on and so forth, and change those things. Get them to form their business entity and enter into a contract with them, a formal independent contractor agreement with them. That would be my recommendations going forward. If they're employees, put them on the payroll. And you do have part of, how long has it been going on that they've been misclassified? You may have some potential liability for those prior periods, but better to fix it today and limit your potential downside. So hopefully you found this video helpful. Misclassification is something I'm seeing real world litigation against small businesses happening on a daily basis, and it's something, don't let it fall off your radar. Develop good business practices. If you need help, engage an attorney, or you can engage an HR, a human resources consultant. Get some help so that on a going forward basis, as your business is growing, you don't have this potential liability sitting out there that could potentially be ruinous for your business in the future. I'm Jonathan Feniak. I'm a business attorney focusing on asset protection, privacy, business formations, and making sure that you have all the information you need to protect yourself and your company and allow it to grow.